Welcome to our guide on donor-advised funds, a powerful tool for strategic charitable giving. If you want to maximize your impact while gaining significant tax benefits, donor-advised funds, or DAFs, offer an innovative approach to philanthropy. Today, we'll explore how this vehicle helps manage and distribute charitable donations over time, giving you control, flexibility, and financial advantages. This falls under the category of giving and taxes, two areas that can work together beautifully when properly understood. So what exactly is a donor-advised fund? Think of it as a charitable investment account. You make a contribution to the fund and receive an immediate tax deduction. Then, over time, you recommend which charities should receive grants from your fund. The key advantage is that you get the tax benefit right away, but you maintain the flexibility to distribute the money to charities whenever you choose. It's essentially a middleman account that sits between you and the charities you want to support, giving you time to make thoughtful decisions about your giving. The process is straightforward and involves 4 key steps. First, you contribute assets to your donor-advised fund. This could be cash, stocks, or other assets. Second, you immediately receive a tax deduction for that contribution. Third, the funds in your account can be invested and grow tax-free, potentially increasing the total amount available for charity. Finally, you recommend grants to qualified charities over time, distributing the funds according to your charitable goals and timeline. This structure gives you both immediate tax benefits and long-term giving flexibility. Donor-advised funds offer 2 major tax advantages. The first is an immediate tax deduction. You receive the full tax deduction in the year you contribute, even if you plan to distribute the funds to charities over many years. This allows you to maximize your tax benefits while maintaining complete flexibility in your charitable giving timeline. The second advantage is tax-free growth. Your contributions can be invested within the fund, and all investment gains accumulate without any capital gains taxes. This means more money grows for charitable purposes, maximizing the overall impact of your philanthropy. Beyond tax advantages, donor-advised funds provide several other benefits. You get flexibility and control over when and where to distribute funds, giving you time to research charities and align your giving with your values. Many funds offer a privacy option, allowing you to make anonymous donations if desired. Record-keeping becomes simplified because you receive one receipt for tax purposes instead of tracking multiple donations throughout the year. Perhaps most meaningfully, you can include family members in grant recommendations, building a legacy of giving and teaching younger generations about philanthropy while making collective decisions about charitable distributions. Donor-advised funds accept various types of assets, not just cash. Cash is the most common and straightforward contribution method. However, you can also donate stocks and securities, which is particularly advantageous because you avoid paying capital gains tax on appreciated assets. Real estate can be donated as well, allowing you to receive a fair market value deduction without the hassle of selling the property yourself. Many funds even accept other assets like private business interests, cryptocurrency, and more. This flexibility in contribution types opens up strategic opportunities for tax-efficient charitable giving. Let's look at a practical example to understand the tax strategy. Imagine you have a windfall year with $500,000 in income and want to support charities over the next 5 years. With direct giving, you might donate $10,000 per year for 5 years, resulting in smaller deductions spread out over time. Some years, these donations might not even exceed the standard deduction, reducing their tax benefit. However, with a DAF strategy, you contribute the full $50,000 now, receive the complete deduction in your high-income year, and then distribute $10,000 per year over time. This approach maximizes your tax savings by concentrating the deduction when your income and tax rate are highest. Before opening a donor-advised fund, understand these important considerations. First, contributions are irrevocable. Once you contribute funds, they're permanently designated for charity and cannot be taken back for personal use. Make sure you're committed to charitable giving before contributing. Second, administrative fees apply. DAF sponsors typically charge annual fees of 0.6 to 2% of assets, plus investment management fees. Compare costs across providers to optimize your charitable dollars. Third, investment options are more limited compared to personal accounts, with choices varying by sponsor. Finally, most DAFs require minimum grant amounts, typically $50 to $500 per distribution, and some require minimum initial contributions to open an account. You have several options for opening a donor-advised fund. Community foundations offer local focus with personalized service and deep community expertise. They're excellent if you want to support causes in your specific geographic area. National charities like Fidelity Charitable, Schwab Charitable, and Vanguard Charitable are large sponsors offering robust platforms with diverse investment options and lower fees due to economies of scale. Finally, many financial institutions, including banks and investment firms, offer DAF services integrated with wealth management. This can be convenient if you want your charitable giving coordinated with your overall financial planning. To summarize, donor-advised funds offer a powerful way to maximize tax benefits, grow charitable assets, and distribute donations strategically over time while maintaining flexibility and control. The key advantages include receiving an immediate tax deduction, enjoying tax-free growth on your contributions, maintaining strategic giving flexibility, and building a family legacy of philanthropy. Whether you're facing a high-income year, have appreciated assets to donate, or simply want more control over your charitable giving timeline, a DAF might be an excellent tool for you. Consult with a financial advisor to determine if a donor-advised fund aligns with your specific giving goals and financial situation.
If you like this video, hit that like button and don't forget to subscribe. Visit CodeLucky.com for more such useful content.